Kitco Mining special coverage of BMO's 33rd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.
Calibre Mining is set to join the 500,000 ounce a year Gold Producer Club. This is Paul Harris for Kitco Mining at the BMO Metals and Mining Conference in Hollywood, Florida. And joining me this morning is Darren Hall, President and CEO of Calibre Mining. Darren, welcome to Kitco.
Oh, thanks, Paul. Appreciate you taking the time.
2023 was another great year for Calibre Mining with record production, and you began the year by completing the acquisition of Marathon Gold to acquire its Valentine project in Newfoundland and Labrador in Canada. You don't let the grass grow under your feet, do you?
We try not to. We try to keep it moving. I mean, again, our vision when we created the company was to grow a mid-tier, quality mid-tier, and we continue to progress along that journey.
Now, the Marathon deal will take the company to the hallowed production ground of being a 500,000 ounces per year producer. Why is attaining that level of production so important? What does that allow the company to do?
Well, I think a couple of things, right? Is that it's not just the altruistic target of getting to 500,000 ounces. Is ensuring that you can do it responsibly and with an accretive basis, right? And we saw this as a great opportunity to be able to grow our 300,000 ounce a year producer into a 500,000 ounce a year producer. Obviously, it puts us into a different tiers perspective, different re-rate opportunity. So lots of multiple benefits across. We get into a critical size where it becomes more difficult for people to ignore us.
Over the years, you've managed to keep your all-in sustaining cost relatively stable at a time when inflation is sending other producers all-in sustaining costs, very, very high. What's your secret sauce?
There is a secret sauce, Paul. It's really about maintaining the focus, sticking to your knitting, and ensuring you develop good teams of people who are focused on and have the clarity and responsibilities, good accountabilities, and have the authorities to be able to execute. And that's what we've done in both our jurisdictions, in Nicaragua and now Nevada, is it created teams that are very much focused on delivery, and we'll do that as we develop the product in Newfoundland.
Now, Calibre's got a history of making what some would say, in perhaps a pejorative way, opportunistic acquisitions. And Marathon and Valentine is the latest in those. Marathon is in the process of being built. How difficult is it taking over somebody else's build?
Yeah, well, again, if people look at it as being opportunistic, we appreciate that. I see it as a compliment, right? Is that, one of the things we've strived to do is maintain that flexibility within Calibre. So, to be able to build cash, grow production, to allow us to be opportunistic when opportunities presented. And that's exactly what we saw here with the Marathon purchase, is that there was a company that had a need. There's a funding shortfall for the property. We had funds. So it was one of those quintessential old-time mining deals where 1 + 1 = 3, because there was a need, there was a solution, and both parties were benefit.
And in terms of the build, are you going to execute on Marathon's plan? Are you going to make adjustments, improvements, do something slightly differently?
All of the above. And not to be just offhand, but it will be continuing that focus that Marathon have put in place. I mean, the project's over 50% built right now. It's significantly de-risked from a project execution perspective. As we've seen, a lot of tension in the builds have come from what I call subsurface type issues associated with geotechnical. All right. Well, the tailings facility is in place. The starter dam is in place. It's been approved by the independent engineers. The mill foundations are in place. So a lot of the geotechnical risks associated with properties is now behind us. So we'll continue that path. There's going to be opportunities for us to do things differently as we look to birthing the project here in H1 of 2025. Absolutely. We're in a different funding position than Marathon is. We have a different skill set as an organisation as well to look for opportunities to do things differently as we've demonstrated in our past. So I think it's exciting times.
Recently, there's been a couple of incidents at projects around the world in terms of sort of technical failure aspects. When you're acquiring an asset, is that something that's always in the back of your mind, that no matter how much due diligence you do, you never really know the asset until you're the owner and can really get your fingers into it?
Yeah, Paul, I mean, there's always a level of risk associated with any acquisition. I mean, but if we consider what this asset is at Valentine, well, it's a relatively simple project, right? It's significantly de-risked from a geotech perspective, as I talked about. It hasn't yet been built. It's in the process of being built. It hasn't been operated. So we get to lay the framework for exactly how it gets born and what it looks like as we develop the property for the next decades, right? So the risks associated with it are significantly less. Our focus on the DD perspective, as we went through and kind of late last year was to ensure that we're comfortable with the capital that we've allowed for in the DD, and that secondly, when the operation comes into production, that we can deliver into that margin that was anticipated to be able to return the capital.
The history of Calibre, you've been very active in the M&A space, mergers and acquisitions. Why do you think there hasn't been more M&A in the gold space?
I can only speak from what we've looked at, right? And we've looked at lots of opportunities, and some of the opportunities haven't been able to play out. Either there hasn't been that value proposition, you couldn't get a deal to be done. So again, there is no one-size-fits-all answer to that question. But, we're very happy with what we've been able to proceed, both in Nevada and now in Newfoundland. And going forward, we'll keep our eyes open for other opportunities as they present as well. But our focus right now is to be able to continue the path and bring Valentine Gold Mine into production in H1 2025.
Some new opportunities came onto the market last week when Newmont announced that the 6 assets it wants to chop following the acquisition of Newcrest Mining. Yep. Will that unleash a new wave of M&A?
You would anticipate so, right? And again, those assets that come available may be accretive for some organisations, and we wish them all the very best. I mean, obviously Newmont are very focused on creating value from those dispositions, but as we stand, we're very focused on continuing the organic growth we have in Nicaragua, on continuing to explore in Nevada, and to be able to birth the Valentine Gold Project. So.
Now that you've brought in Valentine and you're en route to that 500,000 ounce per year production level, what do you see next in the future of Calibre? Where do you go from here?
Well, again, as I mentioned, I think it's really about ensuring that we continue not to disappoint our shareholders, so deliver into expectations that we've created in Nicaragua and Nevada, and also to be able to continue to build and deliver safely, responsibly the Valentine Gold Mine in H1 2025.
Okay. And what are some of the key goals for you for this year?
Well, really about birthing Valentine, right? Bringing it into production, delivering on the commitments, and we'll come out with a project update here in Q2 as we re-baseline capital and schedule. But there's nothing that we've seen thus far that raises the red flag compared to what we had in the original due diligence.
In terms of the company share price, despite the fact that gold has been at $2,000 per ounce for the past 10, 11 weeks now, there's people are talking about the divergence of the share prices of gold equities from the gold price. What's your view on what's happening there, and how do individual companies and the sector in general close that gap?
Yeah, no, really, I guess that's $1 million question, so to speak, right? And I guess if we look at our share performance, we've performed very well with respect to our peers and the things like the GDXJ over the last year, both in 2023 year to date this year as well. So even though we do see a disconnect between the equities and the physical metal price, I mean, we're not happy with how our shares perform, but relatively speaking, it's performed well with respect to our competitors. So again, we continue to remain focused on delivering into our commitments and work on the premise that the righteous will prevail at the end of the day, and we don't disappoint, right? And we create an attractive value proposition for shareholders that will attract the money into our product.
We're at the BMO Metals and Mining event, an investor event. What kind of companies do you have on your meeting card? What kind of interest are you getting?
Yeah, no, a lot of interest. Obviously, there's been a lot of talk about Calibre with the acquisition of Valentine. We had a good year in 2023 as we continue to grow and deliver into. So yeah, no, it's been a good level of uptake and interest in the product, and lots of investor interest, so it's great to see.
Well, hopefully that will continue for a long time. Darren Hall, President and CEO, thank you very much for joining us today.
Appreciate it, Paul. Thank you very much.
And this is Paul Harris for Kitco Mining at the BMO Metals and Mining Conference in Hollywood, Florida, in the United States. If you like what you see, don't forget to subscribe.
Kitco Mining special coverage of BMO's 33rd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.